Hey, everybody, welcome to our first, or I guess the last webinar of the year in regards to, and now today we have a special guest. His name is Haitham Foty, and he's with Benchmark Insurance. And I think one of the issues that has come up quite a bit is in regards to protecting your rental property, during COVID, during this, I guess, pandemic, as you could say. But, being in Houston, we do feel pretty normal. Just a little bit about myself. I am the broker and owner of Propertycare. We are a single-family property management company here in Houston. At the moment, we manage a little bit over 400 properties. I started in real estate investing in single-family homes back in 2011. So I feel pretty young. I feel like I look pretty young. But I'm almost been a decade in since I first bought my first rental property back in 2011. I am a licensed real estate agent or broker within Texas. You know, Originally I got my accounting degree from University of Houston. I am a licensed CPA in Houston. And no further ado, I'm gonna present Haitham and give him a moment and let him talk about himself.
Hello, everyone. My name is Haitham Foty. I am with Benchmark Insurance Group. We have been in business for over 16 years. I have about 15 years of insurance experience. We've been through all the hurricanes, all the tropical storms, and I feel like we have a good grasp on the purpose of insurance and the things you need to master and need to know when filing a claim and how to maximize on your insurance when you actually do need it. I'd say we're really, really good at negotiating your rates down better than the average agency. So we're working every year to drive your costs down and not taking these massive increases. And we offer claims consulting for all of our clients. So we're going to walk you through that entire process. I am also a real estate investor. Bought my first deal. It was a single family home, burn house back, I think 7 years ago. And now we're doing a little bit of multifamily. I have a couple retail shopping centers as well. So I am an investor and I understand insurance from an investor standpoint, which, is beneficial for someone looking for insurance. And a fun fact is I play the saxophone, which could be kind of weird, I guess. But yeah, I played that for over 10 years as well.
10 years. So you didn't start when you were like a little kid. You just decided to pick up the saxophone as an adult.
No, I started in middle school through high school and I still have a saxophone. Let me put it that way.
Okay. All right. I thought one day you woke up as an adult and was like, I really want to play the saxophone.
No.
So, I wanted to add that for my own insurance purposes, for my rental properties, for my personal home, I do use Benchmark. So he is someone that I use for my own insurance purposes. Beyond rental properties, Haitham, you guys do the insurance for my vehicles for my company. So I have 3 commercial leases with Benchmark. So I think you guys do more than just property, right? You do business and like vehicle insurance also.
That is correct. We do it all. We do home, we do auto, rental properties. We do errors and omission E&O insurance for a property manager. We do general liability for contractors. We do small businesses. I do auto garages, restaurants. There is no limitations as to what I can or can't write. I have access to all the markets. I do a little bit of oil and gas, although not our specialty. I would say our specialty and our niche is more real estate focused, and finding ways to drive your property insurance rates down. So yeah, there's nothing that we can't write.
Okay. All right. So the next part, I do have a disclaimer before we start our presentation. Is all information contained here in this is deemed reliable but not assured. We are not attorneys and cannot give you legal advice. The content to follow is an opinion and not guarantees of information or performance. Real estate investment are subject to risk and loss capital. This is not an attempt to solicit anyone currently represented by a real estate broker. Propertycare LLC is a licensed brokerage in Texas. So going on to some of the items that we're going to cover today in our presentation is kind of the state of the Houston real estate economy, industry changes after the pandemic, types of policies you need, why flood insurance is important, how to properly file a claim. And I'm going to take the first part, and I think Haitham afterwards is going to continue on with the insurance portion. Kind of tidbit about me is that Haitham and I were talking about this before we started our presentation, was that I don't know anything about insurance. So this presentation is just as valuable for me as anyone else that's watching at the same time. As far as the Houston real estate economy has been going, is that it's been amazing. Meaning home sales have really surged. And I'm definitely one of those people that always kind of try to understand why real estate sales have gone through the roof. And I think the reason mainly, and I can confidently say this, is that interest rates are so low. I think I was just looking at bank rate today, and rates are under 3% for owner-occupied properties. I'm helping an investor right now buy a property, and I think he's getting 3.25% for a real estate investment property, which is an unbelievable rate. It just means that your monthly costs when interest rates are a lot lower, you can just buy a lot more house than you would normally could if interest rates are double. I think when I last bought my residential house, I was at 6.25%. So I mean, it's half that from 10 years ago when I bought my last one. And the second bullet point basically says that the home prices being sold right now has also increased also. And again, what I've come to find out doing a lot more retails recently is that people don't really focus on the price of the house that they're buying. They're just focused on the monthly costs related to it. So, if they can afford $2,000 a month, before they could only buy this is just an example, they could buy a $200,000 house. Now they could potentially buy a $350,000 house just because the interest rates are lower. At the same time though, home prices have increased, but a lot of people have actually kind of, due to the pandemic, have kind of decided not to sell their houses. So inventory of houses within Houston are actually pretty low. From my experience, just helping buyers right now, if there's anything worth on the market worth buying, everything's going to multiple offers, getting sold, and it's going pretty quick right now. Haitham, I didn't know if you had anything to add to that on your side in regards to insurance. How does home prices affect, I guess, the cost of insurance, or are you guys focused on replacement costs or like sales prices?
Yeah, it really focused on the square footages and replacement cost, and the type of upgrades that you have in there and what you really want to insure. But I agree with you, man. The market is so tight right now. We're getting a lot of these California investors, making cash offers. These venture capitalists just dumping a bunch of money on these houses, paying over asking price. And I agree with you 100%. If there's a deal out there, you probably want to jump on it. And with the interest rates so low, they're giving money away, and your out-of-pocket cost up front, despite the fact if you're doing construction or not, is low. And, to what Jerry said, you can get a lot more house for less out-of-pocket, and now is the time because the appreciation is rising vastly.
Okay, so on to our next one. As everyone's aware, we're still in the middle of the COVID-19 pandemic, and just from an insurance perspective, how does that affect people getting insurance, or does it at all?
It affects a lot, and people, most consumers don't really see the behind the scenes of insurance, and how this affected everything was all the lawsuits, all the loss of rent lawsuits. In these policies, it states that viruses and bacteria and pandemics are not covered, right? The majority of policies excluded viruses or pandemics, right? If the exclusion did not show in your policy, technically that coverage is silent. Okay. And that means that you are covered for it. So there's a ton of lawsuits, ton of class action suits going against these insurers. And, they're paying out millions and billions of dollars of litigation just to fight these claims, to pay these attorneys costs money. And what does that do? It causes them to file claims on their reinsurance, which is insurance to protect the insurance company. And when the reinsurance cost increases, those increases get handed down to the consumers on their property, on their cars, and all that. Technically, they're saying homeowners rates and rental property rates should go down because with the pandemic, people aren't leaving their home as much. So the likelihood of damage just taking over on a property is less. But that hasn't been the case. We're projecting, 10 to 15 and even 20% increases on property insurance over the next year, just depending on the insurance company. So be prepared for our property rates to go up. And they're also seeing a lot more arson cases. We've seen a ton of foreclosures happening, which is causing people to light their houses on fire and try to capitalize on some of that claim money. So more arson cases that we're seeing, more lawsuits, and when everything got shut down, it gave insurance companies a couple months to get back to the drawing board and rewrite these insurance policies, right? That's why everything was so hush hush. Everything just shut down. They got to go back. And the biggest thing was workers' comp. People started to realize, oh, well, if I got COVID and I could say I got it at work, I could sue my employer. So they had to reword those documents stating, we're not covering the virus and pandemic, even on a workers' comp situation. So a lot of behind the scenes stuff happened, which ultimately will affect our rates moving forward. We are coastal, we're in Texas, we're in Houston. We get a ton of hurricanes, ton of hailstorms. We already have the second highest rates in the nation. If you look at your homeowner's insurance, you're paying, anywhere from $1,500 to $2,000. In Austin, Texas, they're paying $500. Just to give you a comparison as to what they pay versus us. So what happened with the pandemic is not going to help our cause in terms of, oh, my rate should go down because I didn't have a file a claim.
Okay, so, the first thing that you pointed out was that insurance policies do not cover pandemics or viruses, right, or bacteria
Right.
and stuff. So one of the things that, we were talking before this was that I don't know what's in my insurance because I've actually never filed a claim. I filed a claim one time, I got denied because my deductible was too high. But are there insurance policies now that people know that a pandemic can't happen? Are there insurance policies? And then not only can a pandemic happen, but the government or, our Congress or legislation can come through and say, hey, guess what? You can't evict people now either. So
Right.
are there insurance policies that come into play where it allows people to get a policy that will cover rent loss because the government is now allowing you to evict your tenants out of the property if they're not paying rent?
Right. And sort of the way FEMA came out with flood options, there will be a policy that comes out in the future that states that we'll cover a sublimit. They're not going to say, hey, we're going to cover your annual rental income for this property or for these apartments. But there will be some form of sublimits, 25 to 50K, rough. 1 second. Y'all keep it down, please. Excuse me. Sorry. There will be a sublimit offered policy in the future. But right now, all I would suggest is look in your policy. So you're saying, I really don't know what's covered. Go into your policy. You have a special form, which means, it's one of the better policies in Texas. And it covers anything and everything that can happen to that property, minus the exclusions. Okay. So go into your policy and go to your exclusion page. And you can start looking and seeing what is excluded, and anything outside of those exclusions technically is covered. Okay. So it's about making sure you have a special form policy versus a named peril policy. And a named peril policy is simply, I'm naming the risk that I'm going to cover. Okay. And you're only covered for about 15 items. Anything outside of those 15 items, is not covered. So I'll cover fire, cover water, cover wind and hail. But we're not covering consequential loss. So if a tree falls on your roof, we'll cover the tree damage, obviously. But if the room floods out from the rain that entered the house, we're not covering the water damage. Or if a fire happens, we'll cover the fire. But with all the rain or all the water that the fire station sprayed into the house, you know, more times than not, the water damage from the fire station is greater than the fire itself. So, you know, making sure you have the right policy, understanding the exclusions is imperative when searching for a policy.
Okay, so potentially there could be some down the pipeline where, it could get covered by rent losses potentially.
Right now, insurance companies are rewriting their docs. So if it was silent, it is now going to be an exclusion. And every policy that I've seen on, you know, anything commercial wise, and even on the personal line stuff, for tenant owned properties, they're excluding any virus and bacteria and pandemics.
Right. Okay. So, going on to the next one, we're trying to figure out what type of investor are you for people who are coming in and looking for policies.
Right.
So I will tell you, I'll give you a little bit about what kind of investor I am. So generally I buy houses with a mortgage. I come under contract and then I send it over to Haitham. I'm like, hey, Haitham, I need insurance for this house. And I'm usually reminded by my mortgage company that I need to get insurance. Right. Now, the couple of times that I paid for cash, I've completely forgotten to even get insurance, which is kind of scary, pretty scary to think. And the couple of times that I help a buyer with cash also buy houses, I've forgotten to tell them like, hey, you need to get insurance for your property. So when I do remember to get insurance, I like, hey, can I get insurance for this policy? And I usually look for the cheapest one. So that's kind of how I go about as an investor. And I'm pretty investor savvy. I want to imagine that I'm probably the bigger proportion of the population, like more people are like me than on the other side where they're more safe. So maybe give a little bit of both and maybe tell me what I should be looking for beyond what, my lowest possible quote I could get.
Right. And to go on to your point, even though you're that type of investor that's like, hey, we have a relationship and you know that I'm going to insure that property as if it were my house, right? And I'm not going to leave you exposed of coverage that you're unaware of at the end of the day. But yeah, there are two types of investors. There's the ones that say, hey, I don't have much invested in this property and I'm only putting 30 grand into it. And it's a 2,000 square foot. I don't want 200,000 in coverage. I want to, go down to maybe 100, 150. There's those guys and they're just all about price. I don't want to pay $1,200 a year for insurance. I'd rather pay $900. But understanding what the $900 is getting you, how high your deductibles are going to be to get that price, and how much risk are you willing to take? And I use the analogy, are you a blackjack player? Are you a poker player? The majority of investors that I see from a single family standpoint are blackjack players. They're just saying, hey, I got contractors on hand. I can fix any damages. So I'm really not worried about low deductibles. Give me a highest deductible. Give me the lowest amount of coverage. And, I don't really care about the fine line. That's what I'm seeing. I'm trying to educate those investors, to what coverages they do have, what they're canceling out or what they're eliminating, and how it can affect them in the future. Because it seems like when that does happen and they do have a claim, they have amnesia. They're like, well, why didn't you give me this? And how come you didn't add this on there? And, I would have paid $200 for that, and it sounds good then. But at the time, you're focused more on the deal and your cash flow and your bottom line, understandable. And then I have more of the safer investors who are very cautious. They want to make sure that their asset is protected. I'm dumping 100, 150,000 into this property. If this house burned down, what am I getting back? And how much can I maximize on a claim? So there's two types. And it seems like, I guess from a statistical standpoint, the riskier investors tend to file petty claims. And I'm trying to educate to where let's not use the insurance for smaller claims. Let's capitalize on the insurance whenever you have a major fire damage or a huge liability claim or whatever the case is. But if you have minor water that leaked into your living room and destroyed the carpet, pay $300, get it demoed and put new carpet in, is going to be the best option for you, because you don't want to be tagged as a claim filer to the insurance company. Okay. You want to build strong rapport. The idea is to stay with a carrier for 2-3 years so that you have a little bit of negotiation leverage in the future, and not file those petty claims. Now, on the safe side, those guys, they want beefed up coverages. They're willing to pay extra. They want flood insurance. They want all the bells and whistles. And, a lot of times I try to keep it in the middle, because sometimes they're paying for coverages that they'll never use. Insurance company wants to insure a property for $140 a foot. Well, if that house burned down and you can build it for $105 a foot, that's all you're getting. So why not insure it for, what your building costs are, how much is it going to cost you to build, things like that, and finding out what the true replacement value of that property is. And if it makes you feel better and you sleep better at night, having the extra coverage, then pay for it. But I'm trying to find a balance between the two, in between risky and safe, where you're getting a beefed up policy, you're getting low deductibles, and your costs are minimal as well.
So, before I ever got into real estate investing, right, my insurance, home and auto, was through State Farm.
Right.
Other than the fact, like I said, probably because of price, was there a reason why I should go with you guys other than price, go with you guys rather than State Farm?
Other than price, that being the number one is that I'm saving you 50%, right? So it's hard not to go on that note. But other than price, yes. We have a ton of investor knowledge. We understand the claims process better than most agencies out there. We're going to shop you every year. We have multiple markets to shop. Okay. State Farm, they advertise well, they have a very good policy, but the companies that I'm offering may not advertise as much. They don't have commercials, but the policies are the same, if not better. And at the end of the day, that's your Bible. That's the policy is what's going to hold up in court. And as long as you're getting an HO3 all risk style policy, regardless of the company, obviously we only write A-rated carriers, A and A+ rated carriers. So I'm never going to offer a company that is financially unstable or has received a ton of bad reviews. I had an insurance company called American Risk Insurance, and there was one incident where my client was handicapped and he had a situation where I think the tree fell on a roof and his AC needed to be replaced. And we're talking about a $5,000 claim. And they dragged this thing on for months on and months in. And, he had no AC. He couldn't do anything. The guy was in a wheelchair. We just paid it out of pocket because I truly felt bad for the guy. And that was the last time we offered that carrier. So the types of policies that you're getting is a reason to choose somebody outside of State Farm or Farmers. And then the options that we have. And going into the types of policies for investors.
So before we get in, again, so I always want to kind of give you an idea on how I look at my insurance policy when you send me a quote, right?
Right.
So I do have a separate liability policy for all my rental properties. So this is what I do. You send me the quote. I look to make sure that you don't have a liability line in there, so I'm not paying for liability. And then I go to the bottom and then see what price I'm getting. And then if the price makes sense, then we bind it and we go for it.
Right.
So I guess we'll go through the different types of policies that's within that one quote that you're sending my way.
Definitely. Okay. So understanding, if you're buying an investment property and you plan on having a tenant, pretty quickly, you're going to need a dwelling fire policy, which there's two different options. There's a DP1, which is a actual cash value policy, meaning that you're getting a depreciated value. So if you do have a claim, they will come in and say your roof is X amount of years old, your brick is this many years old, your carpet, et cetera, et cetera. We know that the house burned down and we're supposed to give you 100 grand, but we're depreciating it by 30%, we'll give you 70. So you want to stay away from DP1s or anything that states actual cash value. Okay. DP3 simply means you're getting replacement value. We're declaring this property, 1979 home with, composition shingles and brick, as if it were brand new. Okay. We're rating it as if it were brand new because we understand that the cost of brick, the cost of wood, the cost of roofing is much greater than it was in 1979. So I know in 1979, you built that house for 120, but today to build that house, it's going to cost every bit of 160, 170. So understanding that, right? So make sure that you have a DP3 all risk form policy that has all the bells and whistles included. If you're doing construction, you will need a form of builder's risk insurance, okay? Now, if you're doing minor cosmetic, I'm just going in and I'm painting and I'm changing the granite, I think you can stay away from a builder's risk because you're talking about a weak job that can be done in no time. But if you're doing some pretty extensive construction, you are planning to replace the roof, change the AC, add flooring, even knock some walls down and add some square footage, you want a builder's risk. You can go with a 3, a 6 month, or even a year. Most of my investors get anywhere from 3 to 6 months because they're knocking out the construction pretty quickly. These policies do not include general liability, just so you're aware. So what that means is that we'll cover the property while it's under construction. We will not cover any third-party injuries. If someone were to step on a nail, things like that, right? So you get a standalone liability insurance policy to cover any civilian injuries. And here's where it gets tricky. Just because you buy a liability policy does not mean that I'm insuring the roofer that's on the roof that fell off, or the contractor that was in there and the beam fell on his head and now he has to get rushed to the hospital. It is simply covering civilian injuries, not contractors, for any type of third-party injuries or lawsuits. Okay. And this is where it gets tricky, if you are an investor and you're like, hey, I got the guys, and I use these guys all the time, and we can piece this thing together, I'm not hiring a contractor. You are in fact a contractor, and you will need contractor liability, which will cover your subcontractors that were to get injured and things like that. So you need to understand that there's a fine line. Obviously, hiring a contractor who's insured and has workers' comp is going to cost you a lot more to get done. You may be able to get in and out on a property with 10K. You hire a reputable contractor, it's going to cost you every bit of 15 to 20. But it is because you're paying for the easement of that liability. Okay. So if you are acting as the contractor and subbing everyone together, you will need some form of contractor liability, because if you sell that property and the buyers end up suing you for whatever reason, they got injured, a beam fell off a wall, whatever the case may be, you need to have some form of coverage in place. If the property is vacant, you would need a vacant policy, although the builder's risk does have vacancy provisions, because they understand when you're done with construction, there's going to be a time period where there's nothing being done to the house. So it's kind of tied into the builder's risk. Cost of vacant insurance is really expensive, and I just don't see worth it. But for an average single family investor, this is the types of policies that you're going to be transacting on a month-to-month basis.
When you're talking about the liability policy, when you hire, you were talking about specifically you're acting as your own GC, but if you're hiring like a reputable construction company, they should in theory have their own liability policy where they can lean on that.
Correct.
Is that correct?
Correct. And when you do that, Jerry, that's a good point. When you do hire a contractor that is insured, you make sure that they list you as the additional insured, which is a binding agreement that states that the homeowner, can call his insurance and file a claim if he left the water main on and it flooded out the entire house, or if one of his guys, stole something from the property. Whatever the case is, that you want to make sure that you're listed on that policy. And that's what's really good about us, is that they can my clients usually call me, send me a copy of their insurance, and I just call and verify that the policy's active, because a lot of time these guys just pay for the down payment. They never make their follow-up payment. It cancels, but they have a piece of paper that says they're insured for a year. And it's just that, a piece of paper. So call and verify, call the agency that's listed on that certificate and see if that policy is active, one. And once it's confirmed, make sure you're listed as the additional insured.
Okay. So as far as, I talked about this earlier, where mortgage companies do, there's a mortgage on the house, you're purchasing the house, they do require insurance.
Right.
The first thought that always comes to my mind is that the lender requirements, is that like the gold standard, or is that like the bare bones?
Lately lenders have been requiring a lot of coverage, right? And they're going to be more on the safe investor side, right? They want to make sure that their property and their interest to the property is covered. Understandably, they want 100% replacement cost, which, they want to make sure that there's no co-insurance clauses included. Okay. And what co-insurance is I'm insuring it for 80% of its actual value. But if I go less than that, let's say I do decide to insure it for $60 a foot, right? You have 1,000 square foot house, I'm insuring it for $60K. Well, if you have a co-insurance clause in there and you do have a claim, they're outside of the depreciation included, you're also being penalized another 20% for not being insured adequately. Okay. So understanding co-insurance, right? Making sure it says 100% replacement cost versus 80% replacement cost, or 80% or 90%. So most lenders right now, they are making sure that you have 100% replacement cost with no co-insurance. They want to make sure that you have up to $300,000 in personal liability. And they want to be listed as a lender. And when you start getting into multifamily and Fannie Mae's and Freddie's, they just have a laundry list of coverage that they need added that is costing investors a ton of money. And it's typically coverage that you'll never use. So what I'm seeing these days is these lenders are just throwing a bunch of stuff on there and saying, we want this and we're not going to write this loan otherwise. So look out for that.
Right. So one of the things that in my mind that I do to decrease my insurance premium is to like max out my deductible. Do lenders have like a minimum or maximum deductible that you can have?
They do. They do. Wind and hail, you're not going to see higher than 2%. Anything higher than 2%, they'll probably deny, and no more than like 10,000 for all other perils, which is fire, water, anything outside of wind and hail deductibles. So keep it within that threshold: 2% wind and hail, 5,000 for your AOP deductible.
Right. Okay. So the next one is, flood insurance. I guess, 3 years ago, this was probably one of the hottest topics out there. I've never, even when I started in 2011, I've never bought a house that's in a flood zone. So as a result of that, I don't have flood insurance for any of my properties whatsoever. Now, maybe that's something we need to talk about. I have no idea how much it costs. Like for my current residence that I just purchased, I feel like I need flood insurance for it.
Right.
But just give us, what should we do with flood insurance?
So we figured out a good matrix with flood insurance where, figure out a good amount that if you do obtain about 6 inches to a foot of water, what is it going to cost to replace the baseboards, the flooring, the cabinetry, and the dry out, right? How much is that going to cost? For a 1,500 square foot property, you're only going to need about 50 to 75,000 in coverage to cover, the entire downstairs, to replace all that we discussed without any issues. I think that's more than enough money, unless you're just in a high-end home and you have all the, the cool gadgets and the expensive finishes, but if you're in an investment property, 50 to 75,000 is a nice threshold to cover that property. If you do have a claim, it'll cover it, no problem. And that way, it's going to cost you roughly anywhere from $300 to $500 a year if you're not in a flood zone. If you are in a flood zone, it's based on the elevation certificate and how high or how low the floodplains are. But with constant shifts in the floodplains, they're remapping the zones every year. So places that were not in flood zones are now falling in the floodplain. And once the lenders get wind of it, they're immediately sending you an email or a document stating you need flood insurance right away, or we're defaulting or charging you for the insurance. And you never want a mortgage to force place insurance on you, because they're going to charge you 4 or 5 times more than the average cost. And it's very unpredictable. Our weather patterns are very unpredictable. During hurricane season, it comes in bunches. You just never know if a storm is just going to loom over us for 3-4 days on end. With all the construction, with all the developments going on, we really haven't stopped as a city. I mean, we're the smallest, biggest city out there, and we're doing a ton of construction, and that really affects our drainage, and how we can flow this water, and it becomes tougher, and with all the lakes and everything else. So the increase of construction, all the developments, the weather patterns, the likelihood of a flood happening, like Harvey, is greater, and we're going to see more than those. And I know it was 100 years until we saw the previous one. I think those numbers are going to change. I think we can start seeing those every 10 to 15 years. And, just be careful. And for $300 to $500, I think it's worth doing it. And if you are in a flood zone, FEMA is not your only option. You can go private flood. And when I say private flood, that means, I'm placing my flood insurance with an insurance company and not through the government funded policy. So look at those options. Private flood are pretty competitive in a lot of areas. And if you have multiple properties, you can bundle all your flood on a package policy as well. So, for you, Jerry, it's something that you should look into as well. If you're really not concerned about it, fine. But when we get closer to hurricane season, a lot of my investors tend to get a little nervous, and they're just like, yeah, let's get it. And understand that flood insurance takes 30 days to take effect. So you pay me today, it is not going to be effective till January 31st. Okay. Unless you're closing on the deal today. So if you're buying the property, we can skip the 30-day wait period and get the insurance. But if you already own the property, there is a waiting process.
So for someone that's risk averse, right? Would you recommend, without even knowing the cost of an elevation certificate, if you're buying a new property, would you suggest someone to hey, just go ahead and get the elevation certificate and potentially get a quote for flood insurance?
So I would, before doing that, because elevation cert costs about $500. Okay. Mm-hmm. Before doing that, I would quote it with FEMA, right? And they're going to determine it is in a flood zone. You'll see A or AE flood zone. Okay. Once that's determined, they'll usually give you a rate, right? And if that rate is just outrageous, you're looking at $2,000-$3,000, and you're dead set on buying this property, you want to get an elevation cert. Okay. But before doing that, check your private flood options. Okay. Private flood option will be a great option there and will not require an elevation certificate if the property has never flooded before within the last 5 years, right? So on those qualifications, if they find out that it has been flooded, twice in the last 3 years, they're going to decline coverage. So if it hasn't flooded in the last 5 years, it is in an elevations in a flood zone. Check with private flood. If those rates are coming back higher, go ahead and get an elevation cert. It could help. And I've seen cases where it didn't help the rate. I've seen cases where it just, maybe went down $100 and you're out $4 because you paid for the elevation certificate. So, in most cases, it should help the rate. In some cases, it doesn't.
So moving on, how to file a claim. So as I told you before, I had State Farm. I filed a claim one time, and you get those State Farm commercials where the guy just appears and
Chris Paul.
Yeah, Chris Paul. And unfortunately, in this situation, they couldn't help me. That was my loan experience. So I think I reached out to my insurance agent, and like I said, State Farm's with State Farm, so all the insurance there. So I know you guys are an insurance broker, right? So there's multiple lines of insurance. Maybe you want to tell us the difference between what you guys do versus State Farm, and then after that, how do I file a claim? Do I have to go to the actual insurance provider, or do I go to you guys when I need to file a claim?
Okay. So unlike a State Farm, we are a brokerage. We offer a wide variety of business. We can write a ton of businesses. We do, home, we do auto, we do dwelling fires, we do builders risks. There's no limitations as to what we can and can't write. And that is really what separates us from a State Farm or a Farmers, is that, they only offer select products, and it's typically home and auto and a little bit of commercial, but not much, right? And everyone is so dead set on name. And, they have great commercials, but like you said, my deductible is too high, and they ultimately denied that claim. And, we're offering policies that, we're keeping your deductibles low, and we're still saving you money in the process, where it's a win-win. So that's really what separates us from your State Farms. And also, even with the State Farm, I'm sure the experience was he gave you the 1-800 number, you called, and that was kind of that. You got the bad news broken. Now, if it were I that you called and we're saying, hey, I'm ready to file a claim, the first thing I'm checking is that deductible. And I'm saying, hey, Jerry, send me some pictures. What do we got? Let's assess the damage and see how much you really have, right? Well, you were out of town and there was a little leak, and, maybe there's some sheetrock damage that we can kind of beef the claim up, so to speak, right? So really assessing that damage before you call and file that claim. Because now when you file that claim and you don't reach the deductible, that claim is on your record. And your rates are going to go up next year because you lost the claim-free discount. You filed a claim, even though it was a zero payout. To pay an adjuster to come out cost $400 or $500. The processing, it was still every bit of $3,000 to $4,000 just processing that claim. So even though there was nothing paid out, there was still money cost incurred to that claim. So you're going to be penalized that in the future. So make sure you assess the damage, understand, the cause of loss, when it happened, what was damaged, take pictures, keep a detailed spreadsheet of any items or personal property that's damaged as well, with hyperlinks of what it cost, right? If your house flooded out due to a pipe leak, and all your clothes was ruined, you need to go ahead and log everything that was damaged and make sure that you get paid for that as well. When using, and that's the difference, right? You call me, I'm going to walk you through that, and I'm going to say, hey, Jerry, you probably shouldn't file it because your deductible is $7,000. To replace that roof is going to be $8,000. It's not worth it, right? And that would save you an increase in the following year. Then let's just say you do have enough damage, and you're looking at a $20,000 or $30,000 claim. You don't want to hire just an average guy to come in and say, yeah, I can do that for $4,000. Insurance companies really don't do that. If you find a guy that says he can do it for $4,000 and sends you an invoice for $4,000, they're going to give you a check for $4,000. You want to use a contractor that uses Xactimate. And Xactimate is the same software that the insurance companies use to determine replacement cost, right? And every line item is essential when doing it, because there's so many different line items that you're not privy to. There is a line item for removing your outlet switch. There's a line item for adding that outlet switch. There's a line item for 2 coats of paint and seal. There's a line item for, removing furniture. There's a line item for dumpster. All those things come into play. And when you use a contractor that has claims and Xactimate experience, we're throwing in a ton of those line items that we actually need, right? So I can take a $10,000, $15,000 estimate that the insurance gave me, and I could turn it into a 30 like that with legitimate line items that need to be paid for. Okay. So make sure you find the right contractor. And when you do hire that contractor, try to get him to have that estimate ready. And you're doing all this within a 3 to 5 day period, because typically the insurance company will come out, in a week or two. And that happens, you want to have your contractor out there to talk to the adjuster, to point out these line items saying, hey, well, you missed this and you missed that. And get them to approve a lot of the things that we see that need to be done. And by taking this process, by having a step-by-step on your claim, I'm telling you, 9 out of 10 of my clients that have benefited from our claims consulting service have won. And it's because you're prepared. And the process is for most consumers, oh, I got a claim. Let me call and file a claim. file a claim. I wait on the adjuster. Adjuster comes out. He gives me the finger, says he's not going to cover it. And then I feel like, what the hell have I been paying for the last 5-10 years, you know? And that's where it kind of cuts deep. So if you follow the steps of doing it correctly, and you're prepared for that adjuster meeting, you have your estimate ready, you're not waiting for him to give you an estimate. You're saying, this is what you owe me. And when they see that you've done your homework, that you understand the process, they're less likely to try to take advantage of you. I saw a woman who spoke no English after Hurricane Ike, and her home was just damaged, man. I mean, she had at least $100,000 to $130,000 in damage. Place had to be completely remodeled, and they gave her $40,000. Well, this woman thought she hit the jackpot. She was like, "Oh my God, $40,000." Well, once she got going and contractors were going, they were done with the $40,000 in the first 2 weeks, and they're like, "Hey, we can't finish this job otherwise." So, making sure that you're prepared, making sure that you have people on your team, like an agency who understands that process, that's going to walk you through it. And if this insurance company is just dead set on denying your claim, that's when we go a little bit further. You never stop at the problem. And that's where I see a lot of investors are just like, that's insurance. Well, let me hire a public adjuster. Let's get a second opinion. And a public adjuster is just someone that protects you in the event of that claim. Okay. And even having restoration companies come out and dry your house out. When a hurricane hits, you don't want to be last on that list. You don't want to be, when a catastrophe like that happens, there's only so many resources. You want to have people in your network. So know contractor, know a restoration company, know your agents, and make sure that you're on top of that list when that hurricane hits.
So let me ask you real quick. I see on there that you're referencing using a public adjuster, right? And then
Right.
you also said that you guys do claims consulting services. Is that
Correct.
one and the same, or?
It is.
Okay.
It is. It is. And I'm glad you pointed that out. Essentially, you're getting a public adjuster when you have a contractor that has claims experience without the 10% fee, right?
Okay.
But a lot of times these public adjusters have attorneys that they use to, send attorney letters to try to get them to bite a little harder. So that, there's certain methods, but if you're using a contractor that has claims experience, I think it's in your best of interest to go that route.
Okay. So when we get a policy with you guys, the consulting service / claim adjuster process is included within, or is that an additional service that you guys provide?
Can you repeat that question?
So when you're talking about your consulting / public adjuster service, right?
Right.
Is that just a benefit that we get by having a policy with you guys, or is that another benefit that we have to, or additional costs?
No added charge. As you know, and I don't solicit this at all, but in our building, we have Benchmark Insurance. Downstairs is Rise Construction, which is a reputable construction company that we also own. So basically, we're sending our guys to give you that estimate, and we're not soliciting the construction. Take our estimate. You paid for it because you're a valued client of ours through Benchmark, and use that to protect you and hire whatever contractor you want. In most cases, they want to hire us. We don't do much residential work these days. So we're just going to go ahead and give you that estimate, which is, typically costs about $500. If you ask a contractor to give you an exactimate estimate, it takes a lot of hours. It's going to cost you about $400 or $500. So, use that to your advantage, and it's a free added service for Benchmark clients.
Okay. As we're wrapping up here, I like to say I refer you guys out quite a bit. I never just refer you guys, but I refer, some additional insurers, and more often than not, a lot of people do go to you guys. I think that just kind of speaks to the service that you guys provide. Haven't really ever heard any issues. The reason why I always give options is that I don't want to be caught if something does go wrong. Again, no one's ever come back to me with any bad feedback in regards to Benchmark Insurance, which is, that's why I keep referring you guys. Now, if someone ever came back and said like, hey, Benchmark did this, I think, I may have a different response. In addition to that, I do use you guys personally, not only for my rental properties, but I do you guys for my commercial car leases.
Right.
And as you said, you guys do beyond that, business. What are all the things that you insure? Just to let people know.
Let you know, I do a ton of multifamily. I do a lot of apartment complexes. I specialize in investor packages for single family investors that have, multiple properties. So if you have 4, 5, 10, 20 properties, let's consolidate all those on a commercial policy. We have, you can have an unlimited amount of additional insureds. If you have partnerships and, wrap loans and subject twos, it can all be added on there. And it just makes it easier to manage your insurance every year and not have to worry about, oh crap, I have 10 different policies, 10 different renewal dates, 10 different flood coverages, consolidating and saving that time and money. I do retail shopping centers. I do storage units. I just did a car wash. I do restaurants, nightclubs, contractors. I do contractor liability for developers. I do a steel erection company. I insure horses. You name it, I can do it. If there's something that you're looking for, and again, my niche is property, right? I really like the fact that I can, go through the markets and negotiate property rates. And what I do is I'm not taking your information and saying, hey, how much can I get this for? I'm going in with a story. I'm building a narrative around that client. I'm saying, hey, here's Jerry. He owns 10 single family properties. He has not filed a claim one time in 8 years. Total coverage is about $2 million. He's paying $10,000. If you get me at 8, I'll lock in his business right now, right? So I'm guaranteeing that I'm securing the business. I'm coming out with a target price up front, right? That way we're not wasting time. I'm not saying, hey, oh, can you do it for 8? And they say no, and then it was just wasted time. So I'm saying, if you can do it for 8, great, we'll lock in the business. And that's when I come to my clients and say, hey, look, you're paying 11,000. I got you at 8. Let's lock it in, and then we'll reconfigure next year, right? And it's just a better approach for you to save money from a 10-year standpoint. Like, we're looking at it from a 10-year. I don't want you for 1 year or 2 years. I want to show you in 10 years, that I can save you every bit of 20, 30, 40% over that span. And there's value there. And on top of the added services. So anything property related, I really insure, and, I'm more than happy to help anyone.
Hey, Haitham, thank you for your time, taking the time out and, out of your busy schedule and come and speak with us on here. Like I said before, Benchmark Insurance, you guys are locally right here in Houston, correct?
Yes.
I consider you guys local experts. At Propertycare, we have numerous clients that actually use you guys also. So we have a mutual relationship or mutual clients between the two of us. I've only heard good things. What's funny is that I think our most recent accident, which was the one we had a mutual client. This just came to my mind, was that we had a client where we had a water company turn on water, and she had her house flooded for 3 days before we even knew. Wow. That it was our mutual client, and I think she came out pretty well. It was up in Atascocita.
I remember that. Yes.
Yes, and these are situations where, the point out is that, you never know when you need insurance. Never in my mind, this is, out of turning water for properties, over 1,000 properties. This is the first time we ever had a water company turn on, let the meter's running, and it flooded the whole house for 3 days. Hot water coming from the water heater. Right. And you guys, I think she came out pretty happy with that situation.
That's awesome. And really that's what you want, man. That's what you're paying for insurance every year. And I want to deliver on that, right? I just want to make sure that experience, that one claim that you had in 10 years was a good experience. And for that gives us a good reputation. They know that, we have their best interest in mind, and we know what the hell we're doing at the end of the day.
Right. All right, Haitham. I got to go here, but have a good one. We need to catch up soon.
Yes,
talk to you again soon.
Thank you so much. Thanks for having me, and look forward to the next one.
Okay. All right. Thank you.